To remain updated with the latest business news, click on the bell icon.
With international oil prices surging to a multi-year high, jet fuel prices also saw a steep hike in prices. The aviation turbine fuel saw an 18% hike, the steepest increase ever. The sixth straight hike this year led to prices soaring past the 1 lakh rupee per kilolitre mark for the first time ever. Jet fuel, which makes up for almost 40% of the running cost of an airline, has this year surged to new highs. Even the aviation stocks soared post the increase in these prices. While Indigo logged in close to 4% gains, SpiceJet also shut shop in the green. But the fuel hike spells trouble for the common man, who will have to bear the brunt of a likely increase in airfares. We have aviation analyst Ameya Joshi joining in to decode the impact of the price hike on the common man. Ameya, well, while the markets might still have reacted coincidentally in a positive manner, it doesn't really spell great news for the airlines either.
Absolutely, it doesn't. You have to look at it in multiple ways and not just the fuel price. A lot of this price is actually dollar denominated for the airlines, mainly those related to leasing costs. And if you see the rupee is also sliding, it's weaker by 5.8% over last March. So when you look at all of this together, the cost of operations for airline are going up significantly, which obviously will have to be passed on to the consumers. And even while we are seeing cases of revenge tourism, the moment COVID cases go down and we are out of the wave of COVID, there still are challenges to price higher for every airline. We had a good quarter, but that doesn't mean this would continue like this going forward.
And what's the impact for the consumer, Ameya? Because naturally, airlines are going to look at passing this on.
Yes, definitely. So from a consumer perspective, tickets are going to be a little higher, possibly as we get into summer. One of the peakest seasons in Indian aviation is one between April and June, the summer holidays for the country. And as we get into that, there are two ways. One is that the lower buckets, which the airlines price typically as part of the revenue management, they've been sold out for most sectors because they went ahead and declared a lot of sales in January and late December. So now you only have fares which are in the higher buckets to sell. And now you have to cover a larger ground because fuel is much higher now than what it was in the past. So from a consumer perspective, do expect some increase in tickets. We are already seeing in the market tickets on certain sectors have almost doubled over a couple of weeks. And this is likely to be at this levels for a while unless airlines deploy capacity.
All right. And, in the past, of course, we've had regulators maintaining certain caps on fares. Do you see that changing? There was a talk of that in the past, in terms of removing some of those caps as things started to get back to normal. What do you feel is going to be the next step on that front?
Yeah, so the fare caps continue to be in the Indian market. Yeah. They are restricted to only D plus 15 days. So if you're flying in the next 15 days, there is a lower and upper cap. But the upper cap is still significant high for, let's say, a middle class family of 4 who wants to travel, and you are locked on the upper bracket of this fare cap. It's still significantly high and a large pinch to the pocket. So from a consumer perspective, the pinch will be felt. So the regulator doesn't tell how many seats you have to sell under which fare bracket. It just gives you a upper and lower cap. Airlines do have that maneuvering ability, and with the kind of oil prices, they'll be forced to push it towards the upper end rather than the lower one.
Ameya, thanks so much for joining us. While things are getting back to normal and a lot of travel on the cards for the summer, clearly it's not going to be a cheap trip.
If you like the video, do like, comment, share and subscribe.